What's going on, guys? It's 11 Trading here. Thank you for tuning in. This is our first video on the channel, and today we're coming to break down this beautiful trade on GBP/JPY, which netted us a 3.7 RR return. So without further ado, we're going to get into this video and we're going to break this down for you. I hope you enjoy. Right, so first things first, guys, I'm just going to remove my annotations off the chart. So we have a checklist for you also that you can follow with us. It's very simple, very mechanical, and you literally have to wait for this to play out. That is all you have to do. So as per the checklist, first things first is find your daily bias in the higher time frame. Very important. So as you can see, for however long now, we're in our hourly time frame, but for however long, we have been extremely bullish. We are closing above old highs. We are wicking old lows and closing above. That is indicating a very bullish market. So we found our higher time frame bias, so we know that we are looking for longs. What's the next thing we wait for? We wait for a high resistance liquidity run. Now you might ask yourself, what is a high resistance liquidity run? So we are going to break that down for you right now. A high resistance liquidity run is a sweep of liquidity. It is a manipulated sweep of liquidity where the candle bodies fail to close below. That is what makes it a high resistance liquidity run, being a run on high resistance liquidity. So that is the first thing we wait for. So as you can see, this wick here wicked down and it closed above this liquidity, indicating that the market does not want to go any lower than what it has now. So that's the first thing we wait for, and now we have seen that, we move on to check number 3 on the checklist. So the next thing you do is wait for a break of structure with candle body closure following the higher time frame bias. So obviously I'm replaying at the moment, so I'm just going to click through this. As you can see, I'm still in the hourly time frame as well. I am primarily in the 4-hour and the 1 hour for my analysis, and then I will usually enter my trade on the 15-minute time frame. So we click through. As you can see, boom, there. Break of structure level has been closed above. So if this candle body failed to close above, this would not be valid as a break of structure. But we have closed above, indicating that we want to go higher. So at this next point, what do we do? So once the BOS is confirmed, the high resistance liquidity run becomes our protected low for our stop loss. So this is the high resistance liquidity run. This is technically our protected low, meaning that if the market was to come down, it most likely doesn't want to come below this, as we've indicated it is not wanting to come any lower with the candle body closure. So if we did close below this, this would then be our valid change of character level. So that would invalidate the bullish structure and validate bearish structure. So at this point, I would draw out the order block which created the break of structure, which would be here. But as you can see, our protected low is quite away from our order block. And if we was to just measure, as you can see, that is 85 pips. We don't want an 85 pip stop loss. No, 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 no. That is not what we want. So in this instance, I am going to draw out my long box. I'm going to enter at 25% of the order block as per our checklist. And I'm going to have my stop loss just below the order block. Meaning that by doing this, this is meaning the market is showing us right now that it is not wanting to go any lower. We've had this manipulated high resistance liquidity run and a closure above. The market isn't wanting to go lower. So this order block is going to act as a high probability area to take a buy from. So if we just go back to our checklist, I will show you our entry point is at 25% of the order block that created change of character / break of structure. So this is the order block that created the break of structure. As you can see, we have an imbalance here, a fair value gap, which is also another confluence for us to show that this area is going to hold. So with my risk management, I like to catch a minimum of a 1 to 3. That is the minimum of what I would like to catch. I may take partials at 1 to 2 and go break even sometimes, but the majority of the time I aim for a 1 to 3 as a minimum, really. So let's just carry on playing through the market. So we've got our top. It's starting to retrace a little bit now, coming towards our area. Getting back up, and as you can see, we have created 2 equal highs here, which is a liquidity point which the market could come for and take out. So now if we go down to the 15-minute time frame, because this is where I'd be looking to enter. Play price through. Boom. Tapped in. Perfect. See, we didn't reach the 50% level. We reached just past the 25% level, which is why I enter my trades from the 25% level, because the majority of the time with this setup, it doesn't really reach the 50%. If it does, but sometimes it doesn't. So yeah, with my back-tested statistical analysis, I like to use a 25% level. Then we play price through. So at this point, we have had another break of structure level here, which at this point, I would usually go break even on the trade, just so that I'm risk free. Maybe take a partial, but definitely go break even at this point on the trade. And as you can see, we came close down to our break even level. Likes to mess around a little bit. Boom. Full take profit hit. Absolute beauty of a trade. Absolute beauty of a trade. And that all came from our high resistance liquidity run, indicated here. I should have drawn this up earlier. High resistance liquidity run, candle closure above previous structure, meaning a break of structure level, retest into the 25% of the order block which created the break of structure, TP at opposing liquidity, so at this point it was just above our equal highs, minimum of a 1 to 3. And the beauty of a 1 to 3, guys, is that you only need to have winning trades 30% of the time. If you're riding your trades, your winning trades out to 1 to 3s, you only need to win 30% of the time. With the correct risk management, you can still be profitable of only winning 30% of the time. That is the beauty of it. It's not always about knowing all the concepts and the best at technical analysis and drawing. You need to keep it as basic as possible, and with the correct mechanical rules and risk management, you will be profitable. There is no doubt about it. With this strategy, I only really enter 1 to 3 trades a week. That is all I need. I'm not being greedy. I'm not looking to jump into the market every single morning. I will only enter the market once I've had a high resistant liquidity run, candle closure above, retest of the zone, continuation long. That is my bread and butter setup to a T. So I hope that helps you guys. This is the setup that helped me massively, and I want to be able to help you guys as well. So I hope this helps you guys. Any questions, feel free to ask in the comments and we'll get back to you as soon as we can. Thank you very much and see you next time.